Okay, so we all know that stock charts tell a story. So, what are the charts trying to tell us right now? Let's take a look. This is the Hey Ed YouTube channel, and I am your host, moderator, and all around nice guy, Edward Anderson. I'm not a financial advisor. Don't construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your money. Today, we're going to be talking about the stock market. We're going to take a look at the charts and see what the charts are telling us right now. Okay, so what I'm going to do is I'm going to start with the long-term chart and then zero in, okay? Now, this time last year, I was telling everyone on my channel that I expected this year, 2022, to be a trader's market. What I meant by that was I expected wild swings in the market, not amounting to very much in the end. So let's take a look at what's happened the past 12 months. All right, so this is the one-year chart of the Dow Jones Industrial Average, and you can see the arrows there on the left and on the right. And you can see where the year started and where the year ended. And after living through all of those wild gyrations during the course of the year, the net result is you didn't make a whole lot of progress at all. Okay, so if you put money into the general market this time last year, you're basically right where you started. But meanwhile, you lived through all of that angst along the way. So this is what I meant by a trader's market. Okay, traders want volatility. Now, traders can take advantage of wild swings in the market where investors don't, right? Investors live through all of those wild swings where traders can capture profits during those big swings, right? So that's what I meant by a trader's market. Whereas investors, you guys live through an awful lot of heartache in order to end up right where you started, okay? Okay, so what does the market look like right now? Well, let's revisit that one-year chart and see where the lines are drawn. All right, so we can see very well-defined resistance levels and support levels. So we have that very strong overhead resistance there at the top and very strong support there right at the bottom. So the battle lines are drawn. So let's take a little closer look. This is the 6-month chart, and we get a better feel for where the near-term critical support and resistance levels are. Now you can see that where I have that major support line drawn. That's the immediate major support level on this market. Now this might not look like very much, but these moves are very dramatic. Okay, we're talking 300-400 point moves in a day on these in these charts. So the battleground is very wide. Okay, so if I were looking at this as a fund manager and I'm trying to decide what to do, I'm looking at this and I'm saying, oh my gosh, what do I do? Because the charts are not very well defined. They're not very pretty. Again, great for traders, not very good for investors. What's been going on for quite a while now is this is a very headline-driven market. So it's hard to decide to see where the market's going to go, because at any given point in time, there could be a major piece of news that comes out that will define the market for a short period of time. And the biggest culprit in all this is the Federal Reserve. Okay. Now, the market is a forward-looking mechanism, right? The market always anticipates what they expect to happen over the next 6 months. And the market likes free money. Okay, they like easy money. So the market loved it when the Federal Reserve kept rates low for so long, because it was free money. It was an easy money, environment. Well, now the Federal Reserve, since last spring, has been tightening rates. They've been raising rates. Okay, and so, but on the one hand, the Federal Reserve will say we are determined to crush inflation, right? Which means they've got to make your life difficult. They've got to get you to stop spending money. The way they do that is they raise rates. They make it more expensive for you to buy houses, to buy cars, to buy groceries. So the Federal Reserve actually doesn't mind that inflation is an issue, because it gives them an excuse to raise rates and to make your life difficult. So, I mean, that is actually their job right now. Their mandate is to fight inflation. So what they really want to do in order to fight inflation is to get you to stop spending money. and their biggest tool for that is to raise rates so that everything is more expensive for you, to make it more difficult for you to spend money. Right? So that's what they really actually should be doing, ironically. And then last week, they came up with this big news, which hadn't gotten any press. I don't know why. It's a very big news. The market paid attention. That's why the market had a nice little rally there last week. the Federal Reserve said that they're going to redefine the CPI. These guys are crooks. Okay, these guys are con artists. If they use the same measurement for inflation as in 1985, the actual CPI right now, the actual inflation rate would be over 15%. Okay, but since they started to take out core things like housing and energy, they can manipulate that number. And they can say, oh, see, the CPI is under control now. So this is my worry. On the one hand, they say they're going to keep raising rates in order to fight inflation. On the other hand, they come up with garbage like this to manipulate the number. You can't trust the government, okay? They're lying to you all the time. They keep changing the goalposts, which is hard for investors because you make your decisions based on a certain set of parameters. But when they change definitions on you, it's like pushing on a wet noodle. Okay, you can't get a handle on it, and the market sees that, right? You also have to keep in mind that the big money managers on Wall Street, they have a vested interest in the market not going down, right? Because they don't want you to pull money out of their accounts. Okay, they want to keep your money in-house. So they have a vested interest in coming up with any excuse to make the market go up. Okay, that is, look, this is a game, right? You have to understand this is a game. You got to learn what the game is. So let's take another look at that 6-month chart. Okay, so we can see there the well-defined chart. You can see that little line there in the middle there, right in here, that little channel. Yeah, this is when the news came out about the Federal Reserve they're going to change the definition of the CPI. And look what happened. But then reality came back and they knocked it right back down. So investors are now really frustrated. On the one hand, hey, the market broke out of that channel and now we're rallying. It did not even get up to the previous resistance level. It stopped short, and then this is a really ugly day last Wednesday. And then on Friday, why did the market rally 300 points? Well, partly because it was options expiration day. That's a whole nother, they don't tell you about these things, right? But there are reasons that make markets go up and down. Most people don't really understand. All right, so let's take a look at a closer look, the 3-month chart. All right, so this is where we stand right now. We have very critical support at the 32,500 level and very solid critical resistance at 34,005. So we have a 2,000 point range here in the market. So for the market to make its next big move, one of these levels have to be taken out. Whichever level is taken out first, that's going to dictate the next big move in the market. Okay, so since we know where the battle lines are drawn, and that's a 2,000 point range there, right? I don't see any compelling reason for you to make a big decision one way or the other right now. What I would do is I would sit and wait for one of those two levels to be taken out. And it's probably going to take a while for one of those two levels to be taken out. We're probably going to need some kind of catalyst, good or bad, to make the market make its next big push. Until then, I expect the market to remain a trader's market. Again, what I mean by that is traders take advantage of those swings. Whereas investors, what do you guys do? You sit and hold, right? So you're sitting and waiting. So you're going to continue to be frustrated. You're going to have periods of relief followed immediately by a period of disappointment. So you guys are going to be really, really frustrated. So this is going to continue to be a trader's market for the foreseeable future. Now, if that 32,500 level on the downside gets taken out, next support level is around the 29,000 level. If that gets taken out, then it's Katie bar the door. But we're quite a ways away from there. So you have time, you have the luxury now of sitting back and watching. So I don't see a compelling need, if you're an investor, right, to make a big decision one way or the other right now. I think that for the foreseeable future, we're going to see more of the same. This is going to be a very headline-driven market. And so, I think everyone should start thinking like a trader. Even if you're not actively trading, you want to think like a trader, okay? And I've done a whole series of trading tricks videos. I was surprised didn't get more, views, because if you go to my playlist, look for my trading tricks videos. They're all short videos. I got like 22, 23 of them with 2 or 3 minute videos giving you some really good nuggets about, trading tricks. But those tricks are not just for traders. Everyone can learn. So you should go back. You should watch some of those. Now, of course, I would recommend that you start trading, not yourself, but find a nice program Like the programs that I recommend, I recommend, Novatech or Daisy as trading platforms. Let those guys do the trading for you. Let them figure it out. The returns on them are really, really impressive. I'm not going to mention exact numbers here because I don't think I'm allowed to, but I can talk to you about them one-on-one if you want to get a hold of me. And I also do group Zooms from time to time on those programs. But, you should farm it out. Think about putting a little bit of dough, risk capital only, right? Put a little dough into those trading outfits and let them trade it, let them figure it out, let them worry about it, and then you take your cut of the trading, right? I think it's a sweet arrangement. So that's my take on the current state of the market. This is what I think the charts are telling me, and one man's opinion, right? So do with it what you want. Edward Anderson, live from Minnesota, signing out.
Copy that.